Knowing which way to trade is one of the hardest things for new traders to learn. If the trend's up, you're better off looking for buys. If the trend's down, you're better off looking for sells. We've created a multi-currency statistical comparison tool called the FX Trend Intensity. Right-click on your chart, chart settings. This is available for all of our mentor students. Click Add Script if you're one of our mentor students, and go to FX Trend Intensity. There are no options, it's automatically configured. And this works basically like any of our other trend tools. If it's green, the trend's up. If it's down, the trend's red. The dotted white line is an extreme level. Anytime this 20 level gets hit, that trend is very likely to continue down in our experience. Let's look and see how it looks like on other currencies. Pound dollar. Notice extreme weakness here, rallied up and came down again. You can see the weakness is no longer there. Then it exploded up. You hit the plus 20 level. That trend did continue up another 150 pips. And you can see it kind of ran out of steam up there. And the weakness was more than the strength on any of the up moves. So then it drifted down. Dollar Swiss showed incredible strength right here. And that trend also continued up another 100 plus pips. Then it fell. You can see the intensity was extreme. What that means is we compare the dollar in this instance to every other currency. We compare the dollar to the euro, the pound, the yen, the Australian, New Zealand, CAD. And if it's going down and getting weaker on all the other currencies and the Swiss is getting stronger, then it's going to reflect that on our chart. So instead of having to watch 13 separate charts to get a feel for how strong the dollar is and weak the Swiss is, or vice versa, this does it for you. Sometimes you see a lot of weakness followed by strength, and when that happens, it's best to wait for the market to break out of the high or below the low before you know which direction to continue trading. Once it broke through the low, it was confirmed with incredible weakness right here. You look to sell the next little up move. One way that we do that is draw trend lines on the up move with our stop right above this bar's high. And notice as it's going sideways right here, the downtrend's over and it goes green, breaks out and goes up with incredible strength. Anytime you see an up move with incredible strength followed by a tiny or even sometimes severe down move with far less statistical weakness than the strength, in our opinion, it's very likely to continue up. The secret to trading is small losses and big wins. And so no matter which system you trade with or no matter which tools, you always want to limit your losses to a very small amount, say 10 or 12 pips. If you are in winning trades that take off like this one did, goes up 25, 50, 75, 100 pips, one nice trade like that can get rid of 10 losing trades. Here's Australian yen. And again, there's a little bit of a weakness here. If you shorted that up move, it still made a little bit of money. You would have expected the last strength to possibly continue to the upside, so you might have been waiting for it to break out, but it never did. Because there was previous weakness there, you go short with your stop right here, and this just continued down. On this little counter trend move up right here, you can see there was almost no strength, and therefore the trend continued down. Here's a pound dollar, lots of strength. One of the ways that we use this is in conjunction with our hourly moving average, the containment bands. When you have the containment bands on there, it shows you where the hourly chart's 20-period simple moving average is. Above the hourly, you want to look for buys. Below the hourly, you want to look for sells. And also, once it breaks out from below to above the hourly, typically it pulls back and touches it. If it holds here and then breaks out over the bar's high here, then you want to look to get in. So because there was a lot of statistical strength here, you can see it was chopping around the hourly like it frequently does. It then was weak, and then it broke down underneath there. You would have wanted to sell that. Now, this little counter trend move up here had a lot of statistical strength, which means it's less likely to make a significantly lower low on the next down move. Once this rallied up right here with a lot of strength, goes sideways with almost no weakness, you could have considered buying this breakout here. Now you don't know if it's going to break out above the hourly. Frequently they're selling there. If it breaks out through it, you hang on. If it stalls here, you get out with a very tiny pip move. Here you had extreme strength up, pullback with far less than half the weakness, and you look to get in. And you can also, in many of the instances, use the Fibonacci profit targets to get a feel for where the market's likely to stall on the way up.